moving on to our next speaker. He is the co-founder and director of Perfios, Mr. Govindarajan. He is responsible for setting and executing the vision for the company and ensuring that Perfios becomes the most trusted name in the personal finance software space in India. He has more than 32 years of experience in the IT industry in both US and India. A huge round of applause for Mr. Govindarajan.
Good evening and thanks for coming over. I won't have as dramatic a presentation as Saket had. It will be very mundane, boring. Hopefully it will be all we can relate to that. Okay, it's specific about financial services. So when I came in this morning from Bangalore, as I was getting into the airport in Bangalore, I thought, oh God, I'm escaping the traffic of Bangalore. It's a wonderful place to go to Delhi. So I landed here. It was 37 degrees. I said, maybe I should go back to Bangalore. Bangalore is phenomenally good now. Every evening raining and 24, 23 degree kind of temperature. See, this is a topic I'm going to talk about. Actually, it's not just reinventing, because what is happening is, so we have been, Perfios as a company has been working in this space for about 9 to 10 years now. Before the term FinTech became very popular and glamorous. And so what is happening now is it's not only just reinventing some of the financial services, but because of all these technologies that has evolved in the last few years, there are a lot of new stuff that is coming in. So I would say it is actually financial services getting invented, as well as, of course, reinventing some of the other services that are being deployed. So if you see, every one of these services is getting disrupted, all the way from a simple account opening. I mean, people are talking of number portability similar to the telecom number portability. So one of the reasons we don't want to switch bank account from one bank to another is it's too much of a hassle setting up standing instructions, ECS, all that kind of stuff. And although we are very, very unhappy with the services, we still have to put up with that bank. But now people are talking of using some of these technologies. I can do complete number portability so that you can move from one bank to another. So starting from simple things like savings bank account to like lending, significant amount of lending is now happening through digital lending, right? And we are one of the companies that drives most of the digital lending. Investments, people talk about mutual funds. There are at least 20-25 companies that are helping you do with a single click or direct plans, lots of things that are happening through some of these fintechs. Or insurance. Now people are coming out with very, very innovative schemes. Like if you are taking auto loan, all of us are used to taking per year, I have to take this comprehensive, all that. Now there are companies that comes out with miles-based plans. So depending on how many miles you drive, I will charge you insurance. So all of this is possible with some of these newer technologies that are being developed. Or payment, Saket talked about how we have some of the best payment system and we should be proud of that. Blockchain, again, we talked about it. And then the last point is some of this data aggregation. There was a question about bank security and will RBI allow this. I'll touch upon some of this, how as a regulator, they're actually helping take forward some of this fintech technologies. So I will focus primarily on digital lending and data aggregation because each one of this topic can be an hour's discussion in itself, so we don't have that time. So I'll just focus on digital lending and data aggregation. In digital lending, if you see, all of us are used to the process that is existing today. Like you apply for a loan, whatever may be the type of loan, essentially you give a bunch of papers. Either you go to a branch or if you are affluent, somebody comes to your house, collects all these documents, it goes to their back office, and then they go through all of this in a painstaking fashion, manually enter it, the credit team analyzes it, underwriter goes through it, and then gives you a loan. And it can take anywhere from 1 to n weeks, depending on the complexity of your case. And it's not just submitting this. It's like many times what will happen, you will get a call saying you haven't submitted this document or that is wrong, I need more information. So it's a very iterative process, right? So it's a pain point for all of us, whether it is a customer, a stakeholder, or the bank. For everyone, it's a pain point. And they lose opportunities. The customer loses, like they apply to multiple banks and then they wait for 3 weeks, 4 weeks, all that. So it's a pain point for all the stakeholders. So what some of us do today, like last 3-4 years, we have been doing this solution for practically most of the banks in the country, most of the NBFCs, fintechs work with us. Essentially what we do is, it's not just structured data like your bank statements or your financial statements, pretty much any structured or unstructured data. Because increasingly, a lot of the financial institutions are looking at additional data points about a customer before they want to decide whether the loan has to be given or not. So they want to look at alternate data points Could be from your social media, could be from your mobile, could be from your telco, utilities, could be anything that adds value to the customer's credit rating. So it's not anymore the traditional CIBIL score or your bank statement or financial statement. So as a company, what we do is, and there are players like us, who essentially turned this entire problem of this lending into more of an online lending. Like as a do-it-yourself, you can submit all these documents that a typical bank wants, and then in real time, all this analysis is done by crunching, extracting data from all these online sources. So all of this is done in real time, so that instantaneously you get whether your loan is approved or rejected and all that, solving all the pain points. And it's not only applicable to online. Most of the banks and the NBFCs use it for their back office also, meaning if they get all these applications from, let's say, their DSAs or people out there on the field, the same technologies are used by some of these banks and NBFCs. So if you see the benefits here, it's not just cost savings. It's not just saying I'm reinventing this process, optimizing this process, and then saving some bunch of money here. It's essentially that top line increase, because now the salespeople did not have to worry about collecting these documents and then spending their cycles on this. So typically about 20% of their time is saved on that. So which means they can focus on that much on the top line increase for them. And then more importantly for the customer, it's a huge TAT improvement. You get a turnaround time impact. Instead of waiting for 3 weeks, 4 weeks, in few seconds I get to know the result. Technically I can get to know the result in a few seconds or a minute, saying whether this loan is going to be approved or not, so that I can take some alternate decisions instead of waiting for these 3 weeks, 4 weeks. So all the stakeholders get benefited, and this is not just we are talking about it. Practically every bank, every NBFC, every fintech company uses this kind of a process now. The challenge is one of where previously we talked about it, like bulk of the thing is still offline. So what we do is maybe digital lending could be about 10 to 15% of the entire market. So still about 80-85% need to be converted. Right? But that's the way in which all the industry is heading. The other one is all of us are familiar with this problem, right? So you get a call from your bank. You will be most likely having the primary relationship with that bank, and then you will have credit cards, you will have insurance, mutual fund taken, and then you'll get a call around the dinner time saying, do you want to take this credit card from me? Or do you want to buy this insurance from me? The primary reason that is happening is the banks have absolutely no idea of their customers' data. Although they have all that data, they still don't mine it. They don't have technology, they don't have systems. Because if you go into a bank, typically what happens is each one of the systems is in an island in itself. There is hardly any integration that is happening. So there will be a core banking system, there will be some other kind of system, insurance, all that's one is regulatory reason. Second is the way the IT department itself has been structured, most of these are islands. As a result, one team doesn't know what the other team is doing. So a wealth management guy will call saying, can you please take this service from me? And most probably you will say, I already do this service from you. You guys don't know, right? So as a result, what happens is most of the financial institutions today, they don't have a technology or infrastructure in place to get a view of the customers. Forget view of the customers from a 360-degree point of view, meaning what you have in other banks or other insurance companies or other mutual funds. They don't even know what you have within the bank. Suppose you are banking with SBI, right? It's very unlikely they will know what all you do with SBI. The relationship manager will know exactly what you are doing with that particular relationship manager. That's all. So they have no idea. The primary reason is the systems are not geared to that. Technology was not there till some time back. As a result, they were not able to roll out new product services in a scientific way. Most of the time, the new products are rolled out, or people sit in a room and then gut feel, they say, this looks like a great product, let's roll it out. Maybe at best, they will do a small sampling in 4 cities with 300 people in a room, right? So whereas today, you have huge amount of data available, and these banks had all this data. So they could have done all this analysis. They could have figured out what kind of product has to be rolled out, what kind of cross-selling has to be done. Nothing has been done because the technology, it was not available. And then if you add the other dimension of other banks, so as an individual, most of us have relationship with multiple banks, multiple financial institutions. I may be banking with one bank, but I may be buying mutual fund from some other AMC. Or I may be doing broking with some other company, buying insurance from someone else, taking loan from someone else. So if I see, what happens is, I have a relationship with at least 10, 15 different institutions. So for a bank to track all of that is going to be difficult because they don't have access to all this data. Because in India, unfortunately, none of the banks expose this data, none of the financial institutions expose this data for us to even mine it. And for a end user, it becomes even more difficult because I cannot now aggregate all this data and get a good view of where I stand with respect to myself as well as with peers. Am I doing the right kind of investment? Am I doing the right kind of lending product am I doing? So I have no visibility into any of that. So as a result, most of us don't manage our finance. If you are affluent, you outsource it to an accountant. Otherwise, you just say, fine, I look at my data. If something looks fishy, I'll complain. Otherwise, it's okay. I'll just move on. The primary reason is we did not have any of this technology or infrastructure available to us. So what has been done in the last few years, there are companies like in the US, Intuit or Yodlee, and we have been doing this for the last 8-9 years, where we put together all these aggregation solutions. We work with quite a few financial institutions, where we solve all these pain points. So this solution has been developed, and it has been used. We have a large user base that provides a 360-degree view of one's personal finance, and this is also shared by the bank, so which means now they can do all this cross-selling and other kind of insights they get. And all of this is, of course, user consent-based data aggregation. Now, in all of this, what happens is, once we get the data, the financial institution, they are able to provide this specific inputs. Like for example, we have been working with banks and financial institutions developing robo-advisors based on this technology. So typically the robo-advisor is, they ask you, get you a risk profile, they say this is where you need to invest, time frame, and then maybe these are the kind of products you have to invest. Now what we have done is, by combining this data aggregation technology with that, I know your exact current portfolio, I know what you want to do, match this, and in real time, 24/7, I can do the gap analysis and rebalance your portfolio on a continuous basis. Whereas till this time, robo-advisor will be typically, I mean, that's what most of the folks even in the US do, is typically they capture your risk profile and then they figure out this is what you need to invest and continue to monitor your portfolio. Whereas we are here combining this data aggregation technologies with that and then able to provide a much more refined version of a robo-advisor. So this is what I call as like inventing a new space kind of a thing, which was not possible without some of these technologies. And this obviously helps the end users also, because they get to get their entire view. But in all of this, what happened was, we developed all this solution with some proprietary technologies. And the banks were very, very keen on using this. They started using this. And RBI as a regulator said, this looks fishy. You are getting all this data, and then you as a company is now having access to a 360-degree view of customers' data. Will there be any issue with that? And there were some questions about, will RBI allow banks to share this kind of data? So what RBI has done now is, you were talking about the regulator can come to hit you, but in this case actually regulator is helping. Because what RBI has done now is, last year they came out with the master directions document and issued a Gazette notification, where anyone doing this kind of a thing has to be a regulated entity. So we are going to become an NBFC. They call a new entity called Account Aggregator, NBFCAA. But what it does is, it makes it a level playing field for all the aggregators. And this is more like the European standard that has been rolled out recently. So which means every bank will now be giving data. Every bank meaning every financial institution coming under various regulators, whether it is SEBI or whether it is AMCs or IFRDA, all of them will, PFRDA or IRDA, all of them will give this data. So then what happens is, whether it is a lending use case or insurance use case or any kind of a financial services, the friction that exists in getting data from users is gone. Because just with the user consent that is available, let's say the Aadhaar or other thing that we are talking of, user consent, UPI, the same user consent, we are working with India Stack on this, the same user consent, you'll be able to pull data for any kind of a financial services. So this friction that exists today of collecting data in paper form or online, whatever it is, all that goes away. User need not have to share any sensitive information. At the same time, you get the data from the users, and the whole delivery of the financial services will become extremely smooth. And this is one area where the regulator is actually helping in driving this whole industry. So just to summarize, essentially FinTech is disrupting every possible financial services. Regulator is also helping here. But in all of this, what we have seen is, it's not like these disruptors are going to take away the market. What disruptors are also finding is the incumbents become a necessary part of the ecosystem, because the incumbents, like a large bank, owns the pipe to the customer. It's extremely difficult for a new fintech company to spend billions of dollars in order to acquire these users, whereas an SBI or HDFC Bank or ICICI has that pipe to the customers. So they are realizing in a practical way that a disruptor has to work or cooperate with an incumbent And that's how all these financial services can be delivered in a cost-effective proportion to all the users. But in all of this, the beneficiary at the end is end customers like you and me. So just to summarize, basically FinTech is not only reinventing, but inventing a lot of services. Thank you.